Let's get to the big story breakdown. Well, Bitcoin trading on both sides of 90,000 this week as geopolitical volatility saw a roller coaster ride of a week. Not just for crypto, but also for stocks, FX, bonds, and commodities. Tariffs and geopolitics may have taken the spotlight this week, but a tokenization panel in Davos turned into a heated debate between Coinbase CEO Brian Armstrong and France's central bank chief over stablecoin yields, Bitcoin, and crypto rules in the U.S. So where do we go from here for crypto? Well, joining me on this Thursday morning is Andy Baehr, head of product at CoinDesk Indices. Andy, good morning. Great to have you back.
Good morning. Where to start? So much
Absolutely.
going on this morning. Fair to say crypto doesn't like tariff problems, right? Even though that seems pretty disconnected. And it was good to see crypto come back with equities when the tariff concerns eased. As Jane just pointed out, this delay with the Senate Banking Committee on the Clarity Act is a bit of a frustrating point, and it's being held up on a fairly narrow issue, which is the ability for companies to be able to share the yield that stablecoin issuers get when they hold treasuries or yield-bearing assets and then deliver stablecoins, which of course famously don't deliver yield. So that's kind of one important, especially for Coinbase, kind of key issue, but it is holding up a lot of other progress that could be made, and I think that that's part of the frustration in the market right now.
And given that 2026 has gotten off to quite a start, and on this Thursday morning here, we're awaiting an IPO for BitGo. So given all that has happened, why are you describing this current moment as crypto's college sophomore year?
Yeah, it was, we're 1 year past the inauguration, and it struck me, maybe it's because, as you know, I have high school age kids, and we're thinking about college. It was the first year, 2025, when crypto was kind of matriculating in the greatest institution of capitalism, right, the United States. And it had four kind of unusual quarters. It had a very difficult first quarter as they got used to the tariff and the macro world. It had great second and third quarters with that great Ethereum rally, all-time highs. And then, of course, our heartbreaking fourth quarter performance. It failed the auto deleveraging exam, right, and had a soft quarter. So we're kind of coming into year number two with a little bit of regulatory support, at least from the regulators, the SEC and the CFTC, hoping for more legislative action and trying to avoid a sophomore slump. First week of January, prices got off to a good start, indicating fresh energy, but the tariff concerns, the Clarity Act concerns, there's still interest rate concerns are really holding things up. So we're kind of in a wait and see mode right now.
Yeah, and you mentioned a few key words there right now, but when it comes to macro maturity, why do tariff threats still actually disrupt markets, and how do investors get a handle on this?
Yeah, it's interesting because so much news has had, in my view, like a little bit more direct impact on whether growthy assets like Ethereum, Solana, XRP, or store value assets like Bitcoin would be affected. And at the same time, the tariffs are at least one or two steps removed from that, right? We're talking about technology and long-term growth. So it is a bit of a head scratcher. I think it's probably coming in with correlation with other risk assets, and you saw equities reacted fairly actively to this, to both the tariff bad news and the tariff good news, especially since, bizarrely, right, this news has tended to come out on weekends, which crypto can react to right away, and equities have to wait. So it is a bit perplexing that is the one thing that seems to rub the fur the wrong way of the crypto market. Luckily, I think hopefully a lot of that is behind us and we can focus on more structural improvements, and really try to get the business going. It's great to see BitGo IPOing here on the floor of the New York Stock Exchange, a critically important custodian, but also once you are custodying a lot of crypto assets and demonstrate that you can custody a lot of things, you become very important to people who want to tokenize things and who want to create stable coins. And those, of course, are the big businesses that we expect to flourish in 2026.
Yeah, and Andy, finally, before I let you go, of course, we're keeping an eye on price action, whether we're talking about Bitcoin or Ether, but it's all about what's happening below the surface. And I know that you keep a close eye on the data. So what are you seeing under the hood?
Under the hood, I think we're going to continue to see what we saw last year, which is our CoinDesk 20 index representing the top tokens is going to continue to pull away from smaller assets. We'll have a reconstitution of that index at the end of the month. Actually, BNB is coming into the index. which is going to be an important addition. We feel like these big cap names that have well-defined growth paths, that have excellent liquidity, that will support ETFs, will start to pull away as distribution for crypto assets and allocation to the asset class become more common. So it's a better time than ever to think about sticking to top names. We have a CoinDesk 5 index, which has an ETF listed here, GDLC. There will be ETFs on CoinDesk 20 upcoming very shortly, and we'll have other big CoinDesk 20 announcements to be made at Consensus Hong Kong in a couple of weeks. So it's better time than ever to focus on allocating to the asset class, focusing on the big important names, and you can keep an eye on those smaller names. But I think if the trend continues, they will continue to lag.
Well, Andy, always great having you on the show. Thank you so much for joining us again. Thank you, as always, for sharing your perspective.
Thank you, and
Thank
good
you.
luck, BitGo.